Alright, so this is going to be the most in-depth breaker / mitigation block guide. I'm going to talk about what they are, forming entries, the unicorn, and putting everything together. So let's just get straight into an example here. Let's take a look at something like this. So here we have a breaker block, and a breaker is basically it's the last up closed candle before we get a liquidity sweep. So we have a liquidity sweep here. So when you have a liquidity sweep, you want to look for your last up closed candle. So this would be your bullish breaker in this case, right? And then as you can see, we came above, closed above. So this is when this breaker becomes active. And then we can see we trade back into it, and then we get a move higher. And a bearish breaker, it's essentially just the same idea. It's the last bearish candle before we get a liquidity sweep on the buy side. So we could consider this one a breaker, but this one it's not too clean. So I guess let's do this one here. So this one would be your bearish breaker, right? Since you have the liquidity sweep right here. And you can see we closed back below on this candle right here. So that's when this breaker actually becomes a breaker block, right? Because before it's not a breaker block yet, it's still like an anticipated breaker block. But once we actually close below, then this actually becomes a PD array, becomes the breaker. And then we go down, come back up, respect it, and then we go lower. And your breaker block technically would be just this entire range, but I like to just look at this last down close candle's close, right? And I want to see a reaction off of that level. So if you had like a bullish breaker, so technically this one would be your bullish breaker, since we have a liquidity sweep down here, and this is the last up close candle before it, then I want to see a reaction off of this close level. So right here, this 2447 level, instead of using this entire thing as the breaker. But that's something that you can kind of experiment with, right? Maybe you might find it more comfortable to use the entire body or use the entire candle rather than just looking for a reaction off of the close of the breaker. But now we're going to be getting into mitigation blocks. So mitigation block it's a breaker but without the liquidity sweep. So let's take a look at something like I guess this one right here. Okay, actually no, it's not the best example. Take a look at something like these ones, I guess. Yeah, I guess technically you could consider this a mitigation block. So right here we have your last up close candle, right? This is your last up close candle, and we don't have a liquidity sweep. I guess you could technically consider these a sweep of liquidity, but I wouldn't really use that as a liquidity sweep, right? So you have your last up close candle, and then we get a move higher. So this becomes your mitigation block, and essentially it's the same thing as a breaker. Like you would use it in the same way as a breaker, but I would just consider them like low probability breakers. I don't really like to use mitigations that often, right? Like you can see here, we just went through it, most likely because we were just bearish on the higher time frame. We already swept this liquidity. We're delivering from this fair value gap, so everything's pointing bearish. So that's probably why this mitigation didn't work. But just in general, I don't really like to use mitigation blocks just because I find them to be pretty low probability. So this would be breaker. Yeah, I'm having a hard time finding mitigation blocks because I don't actually use them myself, but I think this one would technically be a mitigation block. Or this, no, yeah, this one. So we have this down close candle, and then right here when this candle comes up, we don't sweep liquidity. So we don't sweep any of this. So this would be your bearish mitigation block. All right, once we come below, close below, so that's your confirmation that's a mitigation block, and then you can see we kind of respect this level, go lower, and then sweep sell side liquidity. But as I said, I don't really use mitigation blocks. I don't like to use them. I prefer to stick with breaker blocks because that's just what I kind of find most comfortable using. So let's go on to our next topic, forming entries. Or actually here, let me just talk about one last thing. So if you have a pattern like this would be a bullish breaker right here. So if you have a low, a high, a lower low, and a higher high, then that's your bullish breaker. If you had this, a high, a low, a higher high, and then a lower low, that's a bearish breaker. And for a mitigation block, if you had this, so you have a low, a high, a higher low, and then a higher high, then that's a mitigation block. And the same thing, bearish mitigation, a high, a low, a lower high, and then a lower low. So you can see here, we didn't sweep this liquidity pool. We didn't sweep this liquidity pool. So that's the difference between a breaker and a mitigation. If it's a breaker, we sweep this liquidity pool. If it's a mitigation, we don't. So it's really a tiny difference, but when you have that liquidity sweep, it makes it so much more higher probability. So let's try to find a good entry using a breaker block. So here, this is actually Good Tuesday. Yeah, this is actually a really good example. Right here we have your low, your high, your lower low, and then your higher high, right? Or technically this is your last up close candle before we get this liquidity sweep, sorry. So whichever kind of definition or I guess however you want to find your breaker, right? You can use it to get the same result, right? This is a breaker block no matter how you try to find it, as long as you use the correct method. And you can see here we close above, so that's when the breaker becomes like active, I guess. And then we come back, tap into it, get a move higher, come back, tap into it, get a move higher. So this is a really clean breaker block. I'm actually experimenting with something along using this breaker block with this inversion fair value gap. And I mean, I've seen it work out pretty well, but I still have to test out the stats, right? Make sure it actually works over a long period of time. But anyways, this is your breaker, and when you want to enter off of a breaker, so you could take an entry right here. So once we close above, then that would be your sign that this is a breaker. So you could take an entry right here after it closes above, put your stop loss below the candle low, and then just target buy side like this or like up here. up here, something like that. Just make sure your TP is at somewhere that's reasonable. So like this would be reasonable because it's your buy side liquidity, right? We have a fair value gap here as well. So this becomes your intermediate term high, which is a good draw on liquidity. So that's quite a reasonable take profit. And the other entry you could have gotten is either this one or this one. They would have both worked, but in general, I don't like to see, or I don't like to take entries when it taps into the breaker like the second time or like the third time after sweeping all of this buy side. Because when we sweep buy side, right, so we sweep this, and also we have a bearish imbalance, bearish fair value gap, right? There is actually more reason to go lower. So you could have easily gotten stopped out if you took this entry if we were drawing towards this sell side liquidity pool. But given kind of like the higher time frame bias, I'm sure we had some kind of higher time frame fair value gap, like a 15-minute or like an hourly fair value gap or order block or just some kind of PD array to the left. And that's why this specific breaker worked so well multiple times. But in general, I don't like to take entries off of these breakers when they sweep all of this liquidity and then come back to entry. So let's find a good example for a short entry. And okay, while I do try to find this example, make sure you guys do like and subscribe because it does help with the channel. It does help with my motivation. It does help with everything. So I would appreciate it. And let's see. So this would be a bearish breaker right here. So this one, it's not so much of a liquidity sweep. So let's see. We have a fair value gap here. And if we go by the definition of the low, or sorry, the high, low, higher high, lower low. So then by this kind of definition, then this would be a breaker block. But if we use the liquidity sweep, technically you would consider this a liquidity sweep because on the lower time frame, if you go to like the 15-second or like the 30 seconds, I'm sure there's actually a swing high here, but on the 1 minute there isn't. So your entry would be once we close below, this becomes your breaker. So entry off of the breaker, stop, you could put it above the swing high right here, and then just target something to the left, like this liquidity pool right here. That would make sense. Okay, and then you can see it worked out. And yeah, this wasn't the best example, so let's try to go find another one where we actually get a clear liquidity sweep. So this one would be a good one, I guess. Yeah. So right here, you have your breaker, right? Because we swept this liquidity pool. So we have the last bearish or the last down close candle before a move higher towards buy side liquidity, or the last down close candle before we sweep buy side liquidity, close below. So that becomes your bearish breaker now. And then if we took an entry right here off the breaker, you could put your stop above the swing high. You could target like this liquidity pool. You could target this down here. You could target all the way this down here. And you would have gotten either break even or hit your TP on this. But if you guys have watched the fair value gap videos, then you would know you can put your stop above the consequent encroachment of this fair value gap, right? And also, if you guys have watched the order block video, then you can also see the mean threshold of this change in state of delivery lines up with the CE of the fair value gap, the consequent encroachment of the fair value gap. So this midpoint right here would be a really good place to put your stop loss. And also this entry would be really good because you have this CISD that also aligns with the breaker. So if you took this entry with this tighter stop loss, then you can go for a liquidity pool that's a bit closer to the entry, something like this, and you would still get a 3R trade. So that's why it's important to kind of just combine all of these PD arrays together, because it allows you to frame high probability trades with better stop losses, better take profits, better, and just like better RR in general, right? Because if you had your stop above the high, it's basically the RR is basically just half of this, right? So if you guys have not, I would definitely recommend watching my other guides on the other PD arrays and also liquidity that I've uploaded. And let's see, where did I put my oh, right here. Next, all right, we're talking about the unicorn model and also putting everything together. So actually, I forgot to mention how you form entries off mitigations, but I think you guys do get the idea. It's the same as the breaker. It's just with a mitigation block, you enter off of the mitigation block, right, instead of the breaker. But yeah, I'm not gonna go over an example just because I don't use mitigation blocks myself. So the unicorn model is a breaker plus a fair value gap. So once we have this close below, this becomes a breaker block, right? It's the last down close candle before this kind of upward move. And then once this candle closes, this becomes a fair value gap, right? And you can see we tap into this level where we have the fair value gap plus breaker, and then we instantly displace below. So you can put your stop above the CB, consequent encroachment, or the swing high up here. And then we target any kind of obvious liquidity pools down here. But basically, unicorn setup is when you have your fair value gap and breaker block and they line up. So if we take a look at a bullish example, if I can find a bullish example. Okay, what is this? This is Monday. Okay, Mondays, this might not be the best. All right, I'm gonna go back to, okay, actually no, here, when is, I need to go find Tuesday. Okay, because Tuesday had good price action, so I'm hoping there was a good unicorn. Okay, we had a unicorn here, but didn't really get an entry. So here, this one, okay, so this one would be your breaker. This one would be your fair value gap. And I mean, I guess you could have taken an entry off of this, but the actual unicorn setup, you would take a entry off of the breaker, or at least that's how I do it, because that's where both the breaker and the fair value gap are, right? Because if you just take an entry off of this BISI, then like the breaker has no influence on the entry, because it's just a trade off of the BISI. So this would be this is a unicorn. It's just it didn't actually trigger the entry. So let me, okay, this one actually worked out right here. That's the bullish breaker, fair value gap. You can see we came, okay, we didn't sweep this sell side, but we swept this. Oops. We swept this. So last up close candle before this sweep of sell side. All right, so this becomes your breaker, your bullish breaker once we close above. And then once this candle closes, it becomes a fair value gap, a BISI right here. Enter off of the breaker plus fair value gap. Right, you could put your stop below, well, you can put it below this candle that made the fair value gap, or what you also have here, you have a breakaway, so you could put your stop, yeah, right here, or like below this, or below this, or below the swing low, just wherever you prefer, because your stop loss comes down to how risk averse you are and just your personality. So I've taught a lot of different places where you can actually put your stop loss, so you just have to experiment with all of them and see which ones you're most comfortable using, because it really depends on the personality and just how you want to trade. There is no best stop loss, right? Because some people, can make it really tight, right? Have 10 hour and be absolutely fine with it. Other people might want to put it below the swing low, so you have a lower RR but a higher probability, and that might be more comfortable for them. So you just have to experiment a lot, and you can see tap into the unicorn, move towards buy side, right? And it works out very, very nicely. All right, this would be a good example of a mitigation block. Yes. So we have this down close candle. We have this move up, but we don't sweep liquidity here. So this would be a mitigation block. A high, low, a lower high, a lower low. And then once we tap into it, we do get some sort of reaction. But overall, we are bullish, so it doesn't really hold up that well. And let me see. So let's go to Wednesday, see if there was any good unicorn setups. Let's see here. I don't see any unicorn setups that were particularly good. You could, okay, so here, now this would technically be your breaker. So I mean, it really depends on how you want to mark out your breaker, right? Because if you used the entire candle, that would be your breaker. But if you only use the bodies, then this would be your breaker. And what you can see here, there is a small BISI. So it doesn't line up with the breaker if you use just the bodies, but if you use the wicks as well, then it does line up. And you could have taken an entry right here off the BISI plus breaker. And where would your stop loss be? You could put it below the breaker, you could put it below the swing lows right here. And then you can target it. Buy side here, there's buy side here. There isn't really anything too good. Apart from, I guess you could just target this change in state of delivery. So if you were anticipating bearish price action, then this would be kind of retracement, right, into the change in state of delivery, the CISD. So if you were anticipating bearish movement, then you could put your TP here. Otherwise, swing highs like this one would be a good TP. And yeah, if you put it up here, then it wouldn't have actually worked out. But yeah, I guess it's because when we zoom out, you can see we're in downtrend, so we are bearish overall. So something like this CISD expecting a retracement would kind of make sense. And you can also see right here, we came back into it once more, tapped it, got this move higher. And then you could have targeted this liquidity pool, buy side liquidity. And once we sweep the buy side, we just go lower because we are bullish, or sorry, we are bearish. We also built up this LRLR, the low resistance liquidity. And let me see, is this okay? So this is not a unicorn, but we have a BISI, and this would be a mitigation block because we didn't sweep this sell side. So it's kind of like a unicorn, but it's not really, just because it's not a breaker. You could, I guess, take it. You could try it out. I mean, I've never really tried using mitigation blocks plus fair value gaps, or I mean, I've never just taken entries off mitigation blocks. So I don't know how well it works, but you definitely could test it out, see how it is, target like buy side. You can target up here, but I think this right here would kind of be the safe take profit, or just the one that makes the most sense, because we have triple equal highs right here, so that's a really good draw on liquidity. You also have equal highs right here, or no, they're not equal, but you have engineered highs, so relatively equal highs right here. So this would be a good take profit if you're fine with a 1.2R. This one 2.5R. So I mean, yeah, as I said, it just depends on what kind of trader you want to be, right? So yeah, that would have been a pretty good entry. Let's see. And yeah, let's just go on to the last and final point, which is to actually put everything together, right? So everything that I've taught in the video so far. Yeah, let's take a look at Tuesday or Wednesday. Okay. Yeah, because yeah, let's take a look at Tuesday actually, because I like Tuesday. Tuesday had pretty nice price action, I think. So yeah, everything that I've went over in the videos so far. So if you guys haven't watched other videos, I would definitely recommend checking those out. So going into this day, we have sell side that we swept. We have a lot of this sell side that's being swept. We have a lot of this sell side being swept. And once we're down here, you can see that we are turning bullish. So now we're no longer sweeping sell side. We have, okay, so between this and this, there's a higher low. So let's see, let me mark it out. Yeah, so higher low, this is a lower low. So that is one sign of turning bullish, because now we're making higher highs, higher lows. And you can see here, swept sell side one last time before we got this move higher. So I want to see what we had here that made us go bullish. So I did show this example before, but we have a breaker, we have an inversion. So right here, create this inversion, create this breaker, create this. Okay, so we created this BISI. So then now at this point, I'm thinking this is quite bullish, at least till this high right here. So we have 3 bullish PD arrays. right? We also have this order block. We also have order blocks down here. But basically what I'm thinking now, I'm thinking, okay, we have this SIBI, we have this buy side liquidity. So I would expect at least a move towards this intermediate term high here. And that is exactly what we get. Now, once we sweep this, I want to see displacement higher. But instead of displacement higher, we get a retracement lower towards this breaker block, right? And then we get a move higher towards buy side. So now we're just kind of chopping around. We're in this range going up and down. So there isn't really a good entry that you could take. But once we get this last move lower, this with the sweep of liquidity right here, we also have a BPR, not very cleanly respected, but we do have that BPR. Right, sweep that liquidity one last time, tap that breaker block one last time, tap into this inversion one last time, get a move higher, make this busy, right? We respect consequent encroachment, so that's really good for a bullish signature in price. What do we also have? We don't have too much, but what do we make here? Order block off the order block, so this becomes your propulsion block. So now there's a good amount of reason to actually go higher, but we still don't know if this SIBI is going to hold yet, right? If we're like right here, we still don't know if this SIBI is going to hold or not. So what I would do, I would actually just wait for a candle closure above this SIBI first. So we close above right here, 1153, and then now this becomes your inversion fair value gap. So I would expect this inversion to hold and then push price higher. So we get a bit of retracement. Let's see, what else do we have? Okay, there isn't anything too good, I would say. Yeah, there isn't anything too good. So yeah, we get this retracement, sweep sell side, push us higher. What do we also get? Do we also have propulsion block? Right, so order block off the order block, propulsion block, top, and then go higher towards buy side. Yep. And then a move lower. What do we have here? A BPR. Right here, BPR. So since we swept buy side, now we want to go lower. Where do we go? Towards intermediate term low. BC. And then once we sweep intermediate term low and the BC, we want to go higher towards BPR. Come back lower. We don't sweep sell side, but we just come into this BC, go higher, and then come lower once again off of the BPR. Now here, what do we want to do? What do we have? We have order block, propulsion block. We also have sell side liquidity. We have sell side liquidity down here. So okay, it's a bit hard to see. So we sweep sell side, we get a slight retracement towards the SIBI, right? Get another retracement lower, sweep sell side one last time. Let's see, okay, we also tap this busy, respecting consequent encroachment. So that's a really good signature for bullish price action. Create this busy, respect consequent encroachment, kind of. We did just wick inside and then instantly displaced outside. So it didn't respect the consequent encroachment perfectly, but I would still say this is pretty good for a bullish signature in price. And then what do we get here? We just get a instant move higher towards buy side. See if there's anything here. Yep, This is buy side right here. And you can see how cleanly these like liquidity sweeps, these PD arrays actually work, right? What do we have here? We have a retracement lower. There isn't really anything too much. There's a BPR right here. And then we go lower, lower, lower towards. Okay, there isn't really anything too good. Maybe it's in like OTE, but I haven't covered that, so I will go over that in a couple of videos. But we get a retracement, move higher, breaker, fair value gap, breakaway gap. So this is your unicorn with a breakaway gap. Very good for bullish signature. Go higher, higher, higher towards more buy side, I would assume. So we have buy side, sweep buy side, slight retracement, and nothing too good here, I would say. Yeah, there's nothing really too good. It's just we're just bullish, right? So we're just pushing higher. And then right here, I'd assume there's like a high time frame fair value gap or something. But we get this move lower. So BPR, change in state of delivery. We have breakaways. We have this breakaway as well. So you can see now we're becoming pretty bearish. And the reason behind that is because we have all of this low resistance liquidity that we built up. Right, so where are we drawing towards? We're drawing towards, I guess, equal lows. We also have equal lows here. Right, so we have a lot of this sell side liquidity that we built up, right? Equal lows. So we have a bunch of equal lows. We have low resistance liquidity. You can see once we sweep low resistance liquidity, we just instantly dump, right? Because that's what you would expect to happen off of low resistance liquidity runs. And then on this move lower, there isn't really any kind of good entry just because we just dump, and then there's really nothing to actually enter off of unless you like market order in like right here. But once we get this dump, we get a move higher. Now order flow is swapping to bullish. You can see respective consequent encroachment. We're going higher. We have order block, propulsion block, top, blast higher. What else? Breakaway gap. Another propulsion block towards, let's see, buy side. Yep. We have buy side here. Swipe. Go lower. And I mean, okay, so the reason why you wouldn't expect all of these SIBIs to hold is because we already swept a lot of sell side. So now we're expecting bullish PD arrays to hold or get created and bearish PD arrays to get violated. So sweep liquidity, get a retrace towards busy, move higher, inversion. So close above, inversion, top back in, respect, go higher towards buy side. And then once we sweep buy side, now we get a move lower. So let's see, what do we have here? We have a BPR. That's very good, BPR. Respect, go lower. This would be a change in state of delivery. And then where do we go towards? Oh, we don't. Okay, so now we engineer liquidity. So we have relative equal lows here. So since we didn't actually sweep this and we made equal lows or relative equal lows, we would expect this to get swept. So move lower, engineer liquidity, get a move higher, take out buy side. There's a SIBI. Tap into it, instantly reject, move towards relative equal lows, and more of this sell side liquidity. And then get an instant move higher. And we are still holding this SIBI, so we would still expect lower prices. We would still expect bearish order flow. So we still go lower, 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 sweep liquidity, sweep liquidity. See, nothing too good down here. There's a fair value gap here, but there's nothing I would say is too good down here. So we just respect the BISI, sweep liquidity, create this inversion, tap into it, instantly displace. And you can also see here, it's a BPR as well. We also have bullish breaker, because this is a BISI right here. So that becomes a unicorn. And then move towards buy side. How far do we go up? Let's see. So a good place for TP, if you were to take this unicorn entry down here, intermediate term high with all of this low resistance liquidity up here. And then once we sweep that, we get a move lower. See, create this inversion. And go towards this BISI. We don't really respect this inversion because we already got this dump lower and we are changing order flow to bullish. So I would expect this one to not hold as well, especially since because this BISI held so well. Move higher, sweep liquidity, sweep buy side, sweep buy side. And then get a move lower once again. Yeah, nothing too good here. Technically, this is still a BISI down here. We never violated it. We never closed below. So you could say we respected this. You can also say breaker, entry, also BISI. All right, so this, I wouldn't say it's a unicorn just because it doesn't overlap, but it's a good breaker entry for sure because it lines up with the BISI. So if you entered here, TP would be right here. Yeah, I guess like I would, wow, let me think about this. Would I put my TP up here? Yeah, I think so. If I took an entry down here, stop below the consequent encroachment, I think if I actually took this trade, I would put my TP up here. And then I would get stopped break even after I take partials up here. Yeah, because I mean, I don't want to say that I would have put my TP right here just because this one didn't hit. I think this one, this buy side liquidity makes sense for it to get swept. So I would, if I were to take this trade, then I would put my TP up here. And then yeah, scale like half down here or like trail my stop loss. Yeah, because if we create this busy, then I don't want to see this turn into an inversion. I want to just see this used to push price higher, at least till this buy side liquidity pool, and then we can see it turn into an inversion, and then be used as an inversion. So I think, yeah, I would put TB here, but then scale some contracts off at this high. But anyways, now since that we engineered liquidity, so we have relative equal highs, what do? Come lower, tap into this breaker perfectly, and then we can find some sort of entry, possibly. There is a BPR. There's a BPR right here. So since we tap this breaker perfectly, I would assume now we're bullish. So entry off the BPR would make sense. So BPR stop, you could put it below the swing low and then target this relative equal high up here. Then once we sweep it, now we gotta move lower. There isn't anything really too good. I mean, especially because of the time, right? It's like 2 a.m. So that's during London session. And this is during like Asia. Technically, it's not, it's just outside of a kill zone. So, I mean, I wouldn't really expect the best price action or the best price delivery at this time, because I would rather just be trading New York. But there is something quite good here. Actually, there isn't an entry. Well, you could take this unicorn. So let's see. I guess this one would be your breaker. So entry off the unicorn. You could put your stop below here. Stop below the candle. Stop below inversion. Stop below swing low, wherever you want. Then I guess target this. Target this. Target this. Would have worked out pretty nicely. And I mean, this inversion, or sorry, this breaker is holding really nicely. So I'm gonna move lower. No, there isn't really anything too good here. Tap the breaker, and then there isn't really anything too good. Okay, but no, yeah, I think I've been yapping for too much, but I think you guys can just see how, you know, if you combine all these PD arrays, right, you can really form quite a good bias, and you can really improve your entries, your stop loss management, your take profits, just everything. So yeah, make sure you guys do take a look at breakers. They are one of my most favorite PD arrays to use, especially with other PD arrays such as fair value gaps, inversions, and BPRs combined. Yeah, as always, if you guys do have any questions, just leave them in the comments or join the Discord and come ask me. And I would appreciate it if you guys could like and subscribe. So see you.